Hello and welcome to our final webinar of National Home Buying Week. I'd like to welcome everybody here today and to our fantastic panel. Thank you so much for joining us as we help you to unlock the door to your first home. I'd just like to explain a little bit about why we put on for National Home Buying Week. At First Time Buyer magazine, we want to educate first-time buyers on what is actually a very difficult and sometimes complicated process of getting onto the ladder. And we want to make it as easy as possible. So we thought doing a home buying week, we could highlight exactly how it works in very easy to understand language, jargon-free. So we created this website, nationalhomebuyingweek.co.uk, which is full of guides, information, videos, downloadable checklists, all sorts of things, which we hope will help people because it's all in one place. And we just think that will help them to kind of focus of how you actually get onto the ladder. So I'd like to introduce our panel today. We have Steve Pickering, who's Senior Sales Manager at Catalyst. Hello, Steve.
Hiya.
Hi. Kush, who's Director of Residential Investment at Resi.
Hello.
Hi, Kush. Hi. Helen Spencer, who's Director of Development at Plumlife.
Hi, Lynda.
Hello, Helen. Hi. Thank you so much for joining us. Warren Harrocks, founder of Heron Financial.
Good afternoon. Hi.
Hi. Hello, Warren. And Aidan Broom, who's a mortgage advisor at Heron Financial.
Hey, Lynda.
Hello. Hi. Just before we start, this is a live session and we encourage you to comment or ask questions on our Facebook page, of course. But if you think you've got something you want to discuss and you're not being able to watch this live, then do please email us at admin@National Home Buying Week and we will get back to you. So before we start the questions, I'd quite like to hear a little bit about each of your individual companies. So if I could just ask you just to highlight what actually you do, and if we could kick off with you, Helen, can you just give us an overview of Plumlife?
Of course I can, yeah. So Plumlife offers homes for sale across the Northwest and Yorkshire. The vast majority of what we sell is shared ownership, largely targeted at first-time buyers. Most of what we sell is delivered by the development team at Great Places, working with a superb range of house builders, and those schemes we deliver ourselves. We pride ourselves on that customer offer and supporting our customers through their first home buying experience.
Right.
That's a whistle stop.
Great, thank you. Steve, could you tell us a bit about Catalyst?
Yeah, absolutely. So we do a lot of shared ownership and help to buy, and we cover London and the surrounding counties. So we've got about 13 live sites currently selling both help to buy and market sale and shared ownership properties.
Wonderful, great. Kush, can you give us a bit of an overview of Resi?
Sure, yeah. So Resi, we're a national provider of shared ownership. We were set up about 4 years ago, all about getting the voice of the shared owner out there and providing access really to a product that's amazing, that not a lot of people know about. And we're there selling the message and telling people as much as we can that this is a great idea and something they should invest in.
Fabulous. And Warren, would you like to just give us an idea about what Heron Financial is all about?
Yes, absolutely. Heron Financial is a whole of market firm of mortgage and insurance advisors. We work closely with a number of house builders and housing associations. We do about 200 mortgages a month. We deal with all aspects of the shared ownership, new build market, as well as second-hand homes as well. And we sort of, through technology and through our wonderful advisors, we're available 7 days a week. You can schedule a call with us anytime you like, morning, noon and night, 7 days a week, via Zoom or over the telephone. And one of our expert advisors will hold your hand and guide you through the home buying process and find you the best deal on your mortgage and try and make the process as smooth as possible.
That sounds brilliant. That's really good. 7 days a week, eh? Gosh.
No rest for the wicked.
No, absolutely. Okay, so let's kick off with some questions. What's the first one, Dawn?
Yeah, so what is shared ownership and what is Help to Buy and how do they differ?
Okay, Helen, would you just like to give an overview of shared ownership and how it works?
Of course I can, yes. So shared ownership is an affordable route to home ownership. The principle is that you purchase between 25% and 75% of the property. That properties are valued at the point in time that you're looking to acquire it. And there's an affordability calculation that determines what the right percentage is for the individual purchaser to look to buy. There are caps on your income that sit around shared ownership. So across England, you need to have a maximum income of £80,000. In London, that's 90,000, I believe. Steve, you'll know that better than I do. You need to not be an existing homeowner. So this is not a product that's designed for someone who already owns a home. It's about real first-time buyers, or those who perhaps have owned in the past, but at the current time don't own a property. There is a rent payable on the equity that isn't purchased through shared ownership. So effectively, we'll work with the individual customers to ensure that it's affordable once those mortgage payments and the rent are added together. That's, I think, that's a simple introduction. It's a route to buy part of your home. Yeah,
it's really affordable, obviously. Kush, could you just tell us, I mean, we know obviously we're dealing with it all the time, a bit about how you can buy more shares, which we call staircasing?
Absolutely. I mean, a lot of our customers, and I'm sure for Helen and Steve will be the same, you know, when they're buying a home, one of their aspirations is I want to buy the rest of it at some point. And a great feature of shared ownership is that's part and parcel of what you're buying into. So you may well start your journey buying 25, 30% of that home, 40%, and then you're able to buy a minimum of 10% more at any time. And then it goes up in multiples of 5. So you can buy 10, 15, 20, 25, and so on. And the price that you pay is based on the market value of your home at the time you're buying that extra share. So, for example, let's say you buy your home this year, it's worth 200,000, and you bought your 25% share. If you buy in 10 years' time and it's worth 300,000, the next lot of shares that you'll be buying will be based on the current market value at that time.
Great, thank you. Steve, can you just give us a bit of an idea about how Help to Buy works?
Yeah, of course, absolutely. So Help to Buy is an equity loan product. So it's like shared ownership. There are slight differences in London and outside of London. So in London, you can go up to a 40% cap. So sorry, you purchase 60% and then you can get an equity loan for the remaining 40. In the outside of London, you could purchase 80% and then you get the equity loan for the 20%. So you need a minimum of a 5% deposit and then the remainder is a mortgage. So Heron Financials will be able to go through that bit with you. And then you get the equity loan, which is interest-free for 5 years. Very similar to shared ownership, when you come to pay off the loan, like you buy more shares in shared ownership, it will be on the current valuation as well.
Very good, thank you. Warren or Aidan, whoever would like to, can you just give us a bit of an idea about the mortgage market for both shared ownership and Help to Buy?
I'm going to delegate this to my trusted colleague and expert, Aidan.
Aidan.
Thanks, Warren. So on the Help to Buy side, as well as shared ownership, there are a lot of mortgage options available. On Help to Buy, the easiest way to think about it is pretty much everyone on High Street is available for a Help to Buy product other than HSBC. So they just don't do it for whatever reason. So that's quite blanket, it's quite simple. Shared ownership, majority of lenders have shared ownership options. The main difference on shared ownership in terms of what lenders are going to offer is the loan to value you're looking at based on how much deposit you put down compared to your share you're purchasing. So if you look at a 25% share and you're putting down 5% deposit of that share, and then you're technically getting the 95% mortgage off the share. So some lenders are more limited on that than others. So obviously we would look at what options are available. There's always going to be someone available, but the higher deposit is always going to give you more options. It's just standard across the lending market. So shared ownership, the products are a bit more bespoke, because the way Help to Buy works, as long as you've got your 5% deposit for the full market value, anything other than that, if you do a high deposit, you can do as much deposit as you want after that, compared as long as you've got a 25% mortgage. But it doesn't actually change the product on offer. It just means that you're just borrowing less mortgage. So you won't see any differences. The Help to Buy products are very set with lenders. They've got their set ones. Shared ownership products, it will just change depending on what share percentage you're buying and what loan to value you're doing.
That's very interesting. Thank you. Very good. Yeah, lovely. Another question.
Yeah. So the yearly rent increase on shared ownership properties, can this be capped at a certain percentage, or can it skyrocket?
Well, who'd like to go for that one?
The rents are set as a percentage of the unsold equity. The vast majority of rents is set at 2.75% of the unsold equity, but that can vary depending on the individual site and the individual location. That is all fundamentally built into the terms and conditions that you enter at when you purchase the property. So that's it. There is no opportunity for it to skyrocket and get out of control. The idea is that you go into it with your eyes wide open and you're able to see what that rent is going to look like over time and over the duration of the ownership. When just to link it to staircasing, if you then own a larger portion, to go back to that staircasing point, your rents would then reduce proportionally, and that's an important balancing calculation which needs to be worked through once you're thinking about staircasing.
So would you
just to add to that, Lynda, so the other benefit you get with shared ownership, the rent will increase over time, but the lease, the document that you sign as part of your purchase, that's very clear that the rent can only go up by a certain amount, and it's codified by the government. They're very clear that it can't go over a certain amount, and typically the rent would go up by a maximum of 2.5–3% a year. So I think, unlike if you're renting privately, where it's down to your landlord and they may well say, actually, I'm going to put them up by 5%, 10% this year, that wouldn't happen in a shared ownership. You're protected through your lease, and that's very clear on what the rent increase, the maximum rent increase can be.
So really, when you're going into a shared ownership and you're going to be buying one, you can kind of work out a little bit about how you're going to have to budget year on year, which is really useful, isn't it? Very good. Lovely. Thank you. Another question, please.
Yeah, so if I apply for a shared ownership or Help to Buy mortgage, will I need the same documents as if I was applying for a mortgage on the open market?
Aidan, would you be able to tell us about the documentation?
So a lot of the documents are broadly the same. There is extra documents for both applications on the Help to Buy and the shared ownership side. So the easiest way to see it, whatever scheme you do, is your mortgage application is one application, and either Help to Buy shared ownership is a separate application. So they're very dependent on each other. You need them both to be able to purchase the property you're looking at, but you are running two separate applications. It will be going through two separate companies. The lender will do your mortgage, housing association will do the Help to Buy or shared ownership side. So the applications have to match each other though. So you can't have a mortgage term be different to the Help to Buy term. You can't have the deposits be different. You can't have the mortgage amounts be different. They all have to match each other, which is why it's ideal whenever you do it to make sure the same person's doing both applications, because you don't want to be splitting it for any errors to come up. So make sure that you know what is on both applications, what is being submitted to both the lender and the house association. So documents wise, you would expect more, but ideally you would make sure that you're dealing with someone who's going to run through that with you and get everything done correctly.
Absolutely. And as Warren said, it's a lot of hand holding here. So people get very daunted by filling in forms or documents or whatever. So I suppose all of you individually, especially with first time buyers where they don't know what they're doing, there's a lot of people need a lot of help, don't they?
Yeah, just to add to that, let's say I think most of us will have recommended financial advisors, and it's so important to use those because there is more work in a Help to Buy application form, and if you get something wrong, it does delay a sale quite a lot. So your sales executive will be able to talk through recommended financial advisors and solicitors that know the product and know the schemes, so they're able to sort of fast track it and make it go all as smoothly as possible anyway.
Yeah, definitely. Yes, I mean, I always say with conveyancing and financial, you should always take a bit of advice rather than just wandering into your local bank or your local lawyer down the high street, because you do need quite a specialist, especially with shared ownership and Help to Buy. You do need specialist help and advice.
Lynda, I was just going to add on that. I think that the majority of shared ownership is sold by specialist teams who really do understand the detail of shared ownership, and they do understand that they're working with customers who've not owned or bought a property before, and that needs that extra layer of support and guidance. And sales teams, the likes of Catalyst and ourselves, are kind of fully set up to be supporting customers in that way, and to be kind of, like you say, holding their hand right through that process, and recognizing that different customers have different support requirements at different points, and knowing when to kind of help. So it is a different purchasing experience than buying an open market property or a second or third purchase.
Yeah, that's really good to know, because I do think that you do need a lot of advice, and people just have never done it before, so it's hard. That's good to know. Lovely. Another question.
Yeah, so I found a shared ownership home I really like, but there's a requirement to have a link to the local area. Why do developments have this?
Oh, Kush, could you explain why there are sometimes links like that?
Yeah, sure. So about half of the shared ownership homes that are built in our country come through the planning supply route. And what I mean by that is when somebody wants to build some homes in an area, if they're over a certain number, there will be a requirement to provide affordable housing on that scheme. And the local authority obviously are responsible for ensuring that people are housed in their local area who need the help. So part of what the local authority will expect is that if they're providing that housing in that area, that there is some focus on housing local people. And very often with shared ownership, there will be a period of time where a local connection is required. And that could range from having to have some sort of connection to that local authority, whether living in that area or working in that area. But it could go down as far as having some sort of connection to that local parish area. It really depends on the location and how acute those housing demand pressures are within that area. But ultimately, it's about working within that framework. About half of the homes, as I say, that are delivered for shared ownership will have some sort of consideration there. But there are other things that people can look at. If there's a particular area that you're keen on moving to, and the new homes are all identified for local people, there are also what we call resales, and they're second-hand shared ownership, and often that might be a way to access housing in that area too.
Yes, absolutely. So do you have resale properties as well at Catalyst, Steve?
Yeah, absolutely, we do. We have a resales team. So, I mean, while we're on resales, it's probably a good point to point out that through shared ownership, the housing association would have a priority to sell the property when you do want to move. So the best port of call is going through the housing association, and we've got anyone selling one of our resale properties would sell it through us to start with. So we've got quite a lot of resale properties that are available out there.
So Helen, with you obviously at Plumlife have resales as well. All housing associations do. So can you just explain if you're selling, what you do? Steve just said it's like you have the first chance to sell it for the person who's wanting to move. And then if you're buying a resale property, do you buy the same share as that person has got, or is it can you buy whatever share you like?
Well, there's lots of questions in there. I think I'll try and remember them all. So I think the starting point is that one of the benefits of shared ownership is that you will maintain a relationship with the housing association once you've bought your share. So you won't be kind of suddenly faced with talking to a new organisation, someone that you're not au fait with. So if you've bought a first tranche, a new build home from Plumlife or any other competitor, then you will then be continuing to work with that organisation through payment of rent and any kind of support that you might require. Yes. You would therefore know who to contact, and if you wanted to sell your shared ownership share, or if you wanted to staircase, you would make contact with that relevant team and have that conversation about your intention. And like Steve said, then they would mobilise to actually try and sell that for you. There is also the option in due course to try and sell it through other means. My experience would tell me that the vast majority of times it works perfectly fine through the housing association. It's not necessary to go and seek anybody else. So the home would be revalued at that point in time. Some customers choose to, it's going to get a bit technical here, choose to staircase and sell at the same time. Some customers sell their existing share onto someone else who can afford to buy that existing share. So there are different options once you reach that point, and the support there to help you through that process, because again, that can be, you know, you can sometimes need reminding about that process.
Completely.
I think just to add to that, so the housing association, so Catalyst wouldn't sell our share usually, so you would be selling your share, but we'd retain our share so that we give someone else an opportunity to benefit from the shared ownership scheme. But we do get this quite a lot where people think that that's quite difficult and they might struggle to sell it, but you know, there's a lot of demand for shared ownership. That isn't the case, but there is ways where it can be sold 100% as well. So if there wasn't demand for a shared ownership property, it doesn't mean that you're trapped, and then after a certain period of time you can go out through a local agent and we can sell our share as well. So we don't want anyone to get trapped or anything in shared ownership, because that's something that people always ask.
Yeah, absolutely.
That's right, there is lots of options. That's what I was trying to say. Yeah, lots of options at that point in time.
Absolutely. And what's the mortgage market like on resale shared ownership properties?
Mortgage market on resale side, there's many options for that. So it's actually a lot easier, because on the new build side, you've got a lot more restrictions on the loan to value on the deposit again, where on the second hand side, so resale, not at all. No. So you've got much more lender options available. Wow. So it definitely is going to be an easier prospect. And obviously what's handy about shared ownership is a lot of the time smaller mortgages, so a lot less income to be able to make it affordable as well. So lenders are much more viable to make that side doable. The only downside is the rent has to be seen as a commitment that you're paying. So if that is quite a bit per month, that can go against you. But that'll obviously all get taken into account on the calculations, but there's a lot of options there.
Great. Yeah, it's a good option, resales, very much so. Another question, Dawn, please.
Yeah, so if I purchase a home through shared ownership or help to buy, am I able to renovate or extend it?
Steve, are you able to do extensions and all sorts of?
Yeah, absolutely. So so when it's shared ownership, people always ask this question, like, can I decorate? But it's your home. You know, you can move in and you can paint and you can pick up pictures and put in shelves and do all those things that you'd want to do. You won't need to speak to the housing association or anyone to get approval for that. If you're wanting to make bigger changes, so doing an extension like you say, you would need to get approval for that. And also you do need to go through the proper channels and get, you know, planning permission and all things like that as well. So you do need to get approval for the bigger, anything more structural, just because we still own a share. So it's to make sure that it's not affecting the value of our share. But any like little touch-ups and home improvements and little things is absolutely fine for you to just do and make the home your own.
Yeah, definitely. Yes, I think it's very important that people feel it is their home. And that they are able, because if you're in a rented place, you can't probably do it. The landlord won't let you just, you know, put shelves up and paint walls.
That's it. And you sell it like it is. It's not like you're in a rented one. You've got to take it down and make good the walls and everything before they move out, or you lose your deposit. It's not like that at all.
No, exactly. I think it's really important that any first-time buyer realises it is their home, and that is, you know, the number one. And you should make it your home, if you know what I mean. Great, thank you. Another question, Dawn.
Are all properties available with Help to Buy or shared ownership, or is it just new builds?
Kush.
Yeah, so we picked that up a little. We talked about resales, and effectively that's where somebody's selling a share of an existing home. So that wouldn't be brand new. That would be a home that was built whatever. But the majority of homes that are sold for shared ownership are brand new homes. Yeah. And with Help to Buy, they are all brand new homes. There was another point, and it doesn't quite answer that question, but I've been itching to get it out there. So I feel like we missed a trick a little bit earlier. Often we get asked, what is a housing association? Like, what are you, right? What are you here for? I think it's important that we get clear to everybody that we're an organisation, you know, and this is applicable for Steve and Helen, and correct me if I'm wrong here, guys, but, you know, we exist for the benefit of the community. We're not for-profit organisations, so we're not a developer who has shareholders who ultimately are wanting to get rich off the back of the work we do. We are created and exist to develop affordable housing predominantly, and every bit of profit that we make, that's put back in to delivering more affordable housing. And the reason I raise that, Lynda, is I think it's quite important for people to understand that this is a long-term relationship. Helen talked earlier about the fact that we're not just here to hand you the keys and disappear. It's a relationship that we're creating here with you as a purchaser. And being in there with an organisation like that, we're driven by quite a strong moral compass, and we have a very strong social purpose in terms of what we're here to do. And I think that's another real benefit that anyone buying into the product has. They're part of an organisation or a set of organisations that are really looking to make an impact, to make a change in some of our challenges that we have as a country.
Yeah, absolutely. I'm glad you said that, Kush, because it's really important. And I'm sure people don't really understand what a housing association is. So you've made that point very well. Thank you. Very good. Another question, Dawn.
Yeah, I'm trying to understand Help to Buy and mortgages. So I found a 2-year fixed rate that looks really good, but what happens after that?
Okay, Aidan.
So the way any mortgage is going to work, whether it's Help to Buy, shared ownership, just standard mortgage, it's always going to be the same in terms of how it works in the fixed period, how it works after that, and what action you look to take. So if you look to do a 2-year fixed period on your mortgage, for that 2-year fixed periods, you know exactly what interest rate you're going to have on your mortgage. It's guaranteed. You know exactly what your monthly payments are going to be. No matter what happens in the economy, no matter what happens with any sort of Bank of England base rate, no matter what happens outside of your mortgage will stay exactly the same in that 2-year, whether it's 2-year fixed, 5-year fixed, whatever fixed option you choose to go for. The way it works post your fixed period is where you've got a few options available to yourself. If your mortgage is simply left, so you just decided you didn't want to do anything on your mortgage and you allow the fixed period to lapse, you will go on to what's called a lender's standard variable rate. So the way the standard variable rate works, as it sounds, it's variable, so it can change. Usually range from about 3.5% upwards with lenders. So ideally, you want to be avoiding that rate. To give you an idea, on the Help to Buy side, Help to Buy rates start at 1.34. So it's an over 2% jump. So this is where you've got a few options. So this is where what's called the remortgage process comes in. And I think remortgage as a general term and as a process has quite a bad connotation of being quite a stressful process. A lot of people just want to avoid it. So just want to stick with their same lender or just leave their mortgage. I think like 20% of UK mortgages are on SVR rates, a standard variable rate. So remortgages isn't daunting at all. It's actually quite a simple process. So when you purchase your property, you're obviously looking to purchase property you don't currently live in. A remortgage is just exactly the same process, but you live in the property already. So it's a lot easier process because you already live there. What you'll find on a remortgage process as well, when this comes up and you're able to do it, is you can start the process up to 6 months in advance of your deal coming to an end on your current fixed term. So what that means is gives you a couple of options. It means you've got enough time to be able to get the mortgage in place, ready for it to switch over onto the new product. Also means if you're looking at staircase on shared ownership, or if you're looking at buying any of the equity out on Help to Buy, because the housing associations need to be involved as well, gives you time to liaise with them. because that's going to take longer on that side, because you're going to have to get solicitors involved as well, because the land registry is going to be changing potentially if you're looking to do that. And it also means that you've got options available to you in the market, and you're not stressed and you're not rushed. You know, ideal option is going to be start 6 months early, get the mortgage offer within 3-4 weeks, then it's there, it's ready. If you're dealing with a house association as well, you know that they're in the background, that's being done, and everything will be done simultaneously by completion. So that way, you know that your mortgage is secure for whatever fixing period you proceed on after that. You know, again, your monthly payments are guaranteed, and you're not going to go on a higher rate just for the sake of it. You know that you're making the best use of your mortgage by not just paying a lot of interest unnecessarily.
No, it's a great answer. Thank you, Aidan.
It's worth pointing out that if you use a firm like us, we'll be part of that decision-making process. So we'll often contact you 6 months before your fixed rate period is up and explore and talk about your options going forward, and help you make that decision and do that work for you.
Brilliant, because a lot of people won't remember, will they?
No.
You know, 2 years will just slip by, and suddenly, oh, okay.
Yeah.
I found my bank balance is a bit different this month.
Right. So we would notify you that in advance and help you with that decision-making process.
Excellent. That's really good. No, very good answer. Thank you very much. Could we have another question, please?
Yeah, so I've heard Help to Buy is changing at the end of this month. Could you give me some more information about what these changes are?
Steve, there's some changes that are happening, and
yeah, there are. So the old Help to Buy scheme stopped taking applications. I think it was the 15th of December, but around the middle of December now. It was due to finish the end of March, but that was actually extended. So people that have currently purchasing for the old Help to Buy scheme do actually have a further 2 months to complete now because of delays on sites due to COVID and everything. So the new Help to Buy is now taking applications. So you can't get onto the previous scheme now, and there have been some changes. There are two main changes. So the first one is you have to be a true first-time buyer. So before you could have sold your own old property and purchased through Help to Buy. Now this has to be the very first property you own, and that's both in the UK and abroad as well. So it has to be your first and only home. The other change is there's now regional caps. So before, the cap for Help to Buy was 600 across the country. So that would obviously get you a lot more probably from where Helen is compared to the areas we work. Now it's changed, so it's still 600,000 in London, but it's changed and reduced in other areas. So the southeast is 417 odd thousand, and then I think different areas, I think I'm not sure, Helen will probably know what it is for her area, but it's probably around 200,000 or something from off the top of my head. But it does change for different areas. So where you're buying, it could be there's a different price cap, so you'd need to be very aware of that. So if you're looking in London at a £580,000 house, you'd be able to get that on Help to Buy. But then if you think, oh, actually, let me check Hertfordshire, and you're looking at the same sort of house value, that might not be available on Help to Buy.
right.
There'll be more information on that on the Help to Buy website as well. So if they want to have a look and see exactly what the regional caps are, it's best to check there.
Mm. Yeah, the regional price caps are really odd numbers as well. They're not easy to remember.
Yeah, I was going to say they're really precise. It's about 225, I think, in the northwest, and a little bit higher in Yorkshire. Yeah, so quite significantly different, aren't they?
They really are. Yeah, very different.
On the on that side as well, on the regional price cap, to give you an idea of what they've come in and what they are based on, which so they are very random, is the way it's worked is it's 150% of the estimated property value of a sale price this year in 2021.
Okay.
So that's what the regional price cap is based off for new build properties. So obviously London, because it's so much higher than actually 600, they've just kept it at 600. But that just gives you an idea of where it does stand each region. I think there's 6 different areas in the country that it gets split down into. There are just a couple more really niche parts of Help to Buy where it's changed as well, where it's not as advertised. I just want to mention. So a big one that catching people out, if you're married, you both have to go on the application. Where that can be an issue is 2 options. If your partner already owns property, then you'd both have to go on it, but because they already own or owned previously, not viable for Help to Buy. And if your partner has poor credit, you can't avoid them going on it, add them on later just to go to a better lender. So at the moment, you do have to either go to a lender that's going to take the poor credit, or unfortunately wait until the credit builds up for a lender to make it viable. So it's just those points to bear in mind as well, and Help to Buy are very black and white on this at the moment. So it's not something that used to be in place, but it's going forward, they are very strict on it.
I think that's key to just mention again, say the sales executive on the development and the recommended mortgage advisors and financial advisors will be able to help with that. And it's so important because you don't want to get your heart set on a property and then have something like that come up that means you can't buy. So it's so important to speak to financial advisors and everybody at an early stage of a sale, so that you know what you can afford and you know what you're going to be looking at. And if you are looking at Help to Buy, they know you're eligible for the scheme.
Absolutely. Yeah, very, very good. I didn't realise that the whole credit thing was coming into it now, and that you both had to buy. So that's news to me, Aidan. Thank you. Very, very interesting. Lovely. We've got time for another question.
Yeah, could each of you tell me about your favourite developments that you offer for first-time buyers?
Oh, oh, have you got a favourite development, Helen?
I was going to say, do you mind if I start? Because I'm at mine. So, you know, it's the Printworks, which is a shared ownership development in Dunstable, Bedfordshire. So we've got 38 houses, 2 and 3 bedroom houses. And it's been amazingly popular and amazingly busy. We've actually reserved our second phase now. So we've only got 10 properties left that will be released in April. But we had our first completions here yesterday. So we've had 3 yesterday and 3 today. So it's the best part of the job is giving first-time buyers those keys and seeing many happy faces. So yeah, so that's definitely my favourite development at the moment.
That's wonderful. And, you know, it's great for the shared ownership houses as well, because that they aren't, well, not so much in London and the southeast. You don't get so many of those, do you?
No, exactly. And so it's really affordable. So they're available from a 40% share. So, you know, people have been looking at sort of smaller apartments, where shared ownership allows them to buy that 3-bedroom house and means that, you know, both their children can have a bedroom. So yeah.
Wonderful. Really good. Lovely.
Sorry for butting in, Helen.
No, I love that story. I'm really struggling to actually state a specific. I think we've got a site at the moment in an area of Oldham where demand has just been so high, and it's just evidence to us once again just how much pent-up demand there is for this product on high quality homes, particularly in and around Greater Manchester. We've released them in phases, but the demand is we just need to keep releasing more phases and giving customers the opportunity to get involved earlier and earlier, because there's just so much demand. So on that site, to pick up Steve's point, we've just started kind of having sale completions and seeing those customers move into those homes, see them decorate them and make them their own. And that is a really special part of the job, particularly for someone like me who starts by actually buying the land and then sees it all the way through to customers moving in. It's brilliant. So that for me that site for me is particularly strong at the moment. But like I say, there are a lot of first-time buyers at the moment who are active in the market and looking to buy and looking to use these products, which is really positive.
Brilliant. And Kush, what's your favourite development? Have you got any?
Yeah, as with Helen, I mean, it's a tough call, right? But for me, one that stands out right now is So Resi Times Square, and it's in Welwyn Garden City, quite an affluent commuter town on the edge of London. Typical house price there is about 320,000 for a 2-bed flat. But we've got a site there that's overall going to be delivering just under 600 predominantly shared ownership homes. And we're about 2/3 of the way through. Right now, you could buy a shared ownership home on an income of about £18,500 in that location.
Wow.
I think if you think of the impactfulness of that, it's within 45 minutes commute of London. It's a very affluent, quite expensive part of the country. You know, I've quoted the house prices there, but for me, that is the power of shared ownership, right? You're operating in markets where actually your average Joe, your nurse, your key worker, your people that we need to house are totally shut out of that market. And we're able to put a proposition out there that people can access, can get on the ladder. You haven't got some guy or a lady in a grey suit saying, sorry, you know, you're the wrong generation, you're going to have to rent. This is genuinely something that enables people to invest in something and have the same dreams and aspirations that the people before us had. So, sorry, that was a bit of a rant, but that's my favourite one.
Yeah, for sure. No, absolutely. I mean, that is so good value. That is so affordable. Gee, marvellous. Another question, Dawn.
Yeah, where do I find shared ownership and Help to Buy homes?
Okay, well, if you could start that one, Helen. I'm going to ask all of you, because I mean, you've all got websites and things as well, which I think you should be telling our listeners about.
I guess there's lots of ways to find shared ownership. There are help to buy agencies which run across the country are a source of information about where there is shared ownership available. But all of the property portals have shared ownership on them, and all of the local providers and have their own websites, like you say, where you can find all of their properties. I think the answer to the question, it almost depends how clear you are about where you want to live. If you know exactly where you want to live, it's easier in many ways to find those homes through property portals. If you're thinking more generically, then there are shared ownership websites that you can find through kind of any kind of search engine that will tell you what shared ownership there is in the area. But obviously, I'm naturally going to plug our own website. So Plumlife.co.uk is always a good move in the north.
Very good, absolutely. Steve.
Yeah, so I mean, very much the same as Helen. I'll just add that there are filters you can do on the search engines like Rightmove and Zoopla and things. So if you are looking for shared ownership or Help to Buy, you can just choose that option and it'll only bring up what's available for them. But then again, like say the Catalyst website will also have all our new homes on them, so you can come to us directly. But we advertise on Rightmove, Zoopla, and all the standard places. So you shouldn't, if you're looking for a home in an area where we've got properties, you shouldn't be able to miss us.
Right, and what is your website, Steve?
It's catalyst.home, so it's a bit of there's no org or co.uk or anything like that, so it's a bit of an old one. So all you have to just do is Catalyst Homes and you'll find us. Catalyst.homes.
That's easy.
Yeah.
And Kush.
Yeah, so what I'd add, I mean, depending on where you're looking, if you're particularly focused in London, there's a very good website called Share to Buy. A lot of people that buy through us end up coming through that route. But I think it's about using Google, the power of Google as well, right? Dare I say it? Just putting in where you are and shared ownership, you'll be amazed how many options come out. A lot of our organisations that promote these homes advertise in different ways using digital channels, so you'll pick up some of that as well. So alongside traditional portals, you want to have a little bit of random roulette, put in your town you're looking in and put in shared ownership, see what comes up. Hopefully it won't be anything too dodgy. In terms of our website, it's sharedownership.co.uk, and we have properties all over the country, and we'll be happy to see if we can help.
Brilliant, thank you. And it's not really fair if everybody else has given their website a plug. So Warren, Aidan, would you just like to tell us what your website is, and if anybody wants to contact you, I'm sure the details are on that.
Yes, absolutely. I'd encourage anybody to talk to us before they embark upon the sort of looking at a property, so they can work out what they can afford. As I said, 7 days a week at www.heronfinancial.co.uk. Give us a call or jump on a Zoom with us. One of our wonderful advisors, like Aidan, will be there to talk to you and guide you through the process.
Thank you. I think what you just said, actually, Warren, is really important, and we should get that message. Don't start looking for a home until you know how much you can afford. Otherwise, there's a lot of people are going to get so disappointed, and other people think they can't afford something and are pleasantly surprised. So
yeah, we have those conversations all the time. I can actually afford a 2-bedroom when I thought I could only afford a 1. So it's well worth talking to us first.
Absolutely, fantastic. Well, thank you all so much for giving up your time today, and for everybody that's watching, thank you as well. I hope you all have a lovely weekend. It is now the end of National Home Buying Week, but our website will still be there, and it will still be running for a long time. So I will give my own plug this time, nationalhomebuyingweek.co.uk. I hope you all have a lovely weekend, and thank you all. Bye-bye.
Thank you.
Thank
Bye.
you.
Thank you. Bye.